The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Tiger Technicians Hour. This is at 8 a.m. Eastern Time, being pre-recorded for the noontime show. So it is a recording, but it's live right now. So it's a recording if you're listening to it at noon, live right now. I'd love to take your calls at 877-927-6648. Very interesting market. The Dow, I said to subscribers to my opening call, very comprehensive newsletter. We're long and we're short. We go with whatever the charts tell us to do. But at the same time, we have been long the Dow since we started on the Friday. Got stopped out for a tiny loss the Friday 2 weeks ago. Immediately got back in. We got two nice long positions. And what we're really looking at here is the third week after the low was formed on the 9th. This is the test, I said, of strength or weakness. If there is strength later in the week, so today's only Tuesday. If there's, today's only Wednesday, the second day I meant to say, of the week. If by Thursday we're starting to see a push towards the high of 25,432 that was made 2 days ago in the Dow, then what we're looking at, especially if it goes to a leg C, that's really positive action. And what we're looking at is higher highs to come, and that the low that was made on the Friday the 9th was probably not just a low, but a potential the low, meaning that some tests will be higher than the 23,360 level. If in fact there is weakness today, by the end of the day we start to see weakness, and the low of yesterday, which was at 24,800, and was it 84? Yeah, 24,884. If that's taken out, then we're looking at a potential arch formation, saying the test will come sooner rather than later. That is a test of the 23,000s. In the meantime, back at the ranch, the Dow futures are down 37 at 24,910. What's really important here is that you've got a divergence between strength of the Qs, the QQQ. Actually, let me just run the numbers right now. So I'll go to the futures because you're doing a pre-market, and it's important to know where we are. So in the futures, the Dow is down 35, Dow futures. If at 11:10, I said today, and the cash indexes, if the Dow is minus 30s or more, that's going to give a negative close. And if it's plus 20s or more at 11:10, that suggests a narrowish trading band, and that we probably will attempt to go to new recovery highs much quicker. What I'm really looking at here is within the context of the S&P futures, ESH18, the March futures, what we're looking at is that the 2709 level, which is the 9-period exponential moving average, has been really good support for about 1, 2, 3, so far for 4 sessions. Maybe today will be the 5th session. And that implies that a close on the E-mini futures on any 120-minute bar, here's the 120-minute chart, made a peak F at 2754.75 at 2 o'clock on the 16th, pulls back to 2705. That's a 50-point decline. Very big struggle now just to even test the 200-period moving average of 2719. So if there is a pullback, that 120-minute chart is saying, hey, that key support at 2705 becomes vulnerable. If you cannot push maybe 4 or 5 points higher between now and 11:10 and hold there at 11:10 Eastern Time, that's really the clue for me. If there is a push above 2719, it's very strong resistance. We're at 2712, just down $1.25. But have a look at this. If you go to the TF, this is the IWM futures. Up 60 cents at 15.31. had a peak F top in the daily chart back on the 24th of January at 16, 19, 20, pulls back to a really big decline, 14.11, trading now at 15.31. That weekly chart says, oh, this is tough. You want to see 15.57. You want to see about another 24, 25 points higher in the IWM futures, the Russell Mini 2000 continuous contract. That's what's really needed at this particular point. There is a peak F in the weekly chart. There is a peak E potential in the monthly chart. We've only got until the end of the month to break to a new high. I'm watching these closely. A lot of the weekly charts suggest that this is a failure, a potential failure pattern of weekly charts in all the indices, except here's some strength. And this is the Q. This is the cash QQ up 39 cents, holding pretty well, 170.95 on the 26. The Power Shares QQQ Trust Series pulls back to 150.13 on the 9th, now trading at 165. That's 15 points higher. That's good, very good action. But that weekly chart, while it's good, it really needs to break to a new high within 2-3 weeks to say, I'm out of the woods. So I'm watching this very closely. If you do go to the NQ, which is the futures, you'll see the futures up 13 at 68.03, holding very nicely. Will that be 68.60 is needed to be able to get to a leg B in the daily. So let me just run these quickly. You got the GC, which is the gold. Gold is down $1.50. Really not a very good price action, because that single leg A has given back a huge chunk in my CD introducing the Chapman Wave methodology. The CD book talks about single leg A, and here we are giving back a big chunk of it. It really, if gold goes under 1327, 1325, that support, it's going to suggest that there's a good test of the 1320 level very quickly. It needs to get above 1342. That's at 1330 right now. Silver is the same thing. Silver, in fact, is down 0.04 at 1639. This is an arch formation, not very good. High-grade copper is also pulling back here. It's down 0.13 at 3.17. I don't want to see this give back too much. We also do have a copper stock, which we're holding. Had a fantastic percentage gain, given a chunk of that back, so I'm watching it very closely. Copper continuous contract. There's the big arch formation. So big deep cup formation in the monthly chart. Maybe we'll talk about it in a short while. Let me just finish these up. I want to look at crude oil. Crude oil, in fact, has had a bit of a rally that it's given back some. It's down 33 cents at 61.46, and this is very interesting because it's stuck between 63s and 58s as support, 63s as resistance. We'll watch this. There should be a little bit more of a bounce, and then we'll see if there's a test of the 59s over the coming few days. TLT, this is really important. The TLT right now is up 3 cents at 118.22. Really struggling to make some kind of a bottom here. And the TBT, which is the inversion, is at the top, holding the 9-period moving average, is at 38.78, down 2 cents. It just needs to squeak above 39.23 for a new leg D. The weekly chart suggests it really wants to go to a D, even though it's in a leg C right now. It's got a left side, right side price time match. It's a week late. I know it got there perfectly. So we'll be back straight off this Basil Chapman recording live at 8 a.m. for rebroadcast at 12 p.m. I'll be right back. Dow futures up $1.10.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So if we're looking at the Bitcoin, where did it go? There it is. This is the daily. It's in a leg B right now. Now, I was asked by actually a couple of subscribers whether or not we'll be adding it to my list in my Traders Corner, and that's my newsletter. That's the part where I put all the positions that we have, what we're looking at, what we'd like to buy. And I made a big error because I talked about this 6,000.00. I mean, an exact round number. And that goes back from the all-time high that this thing made right there at 19,550. So 19,550, it goes down to 6,000. Believe me, the people who were long and wrong from that New Year's Day event, that period, I'm not sure that many of them stuck around. And if they did, well, now we're back to trading at 12, what is it exactly, 11,099. What we're really looking at this particular stage is, I made a mistake. I talked about it on the show. I said I believe that Bitcoin has finally made a low of consequence and that should be rallying up. My biggest concern for subscribers is that this particular instrument here, the GBTC, which is the only way you can play it if you're going to do it as a fund. This is a fund. This is the Bitcoin Trust, Bitcoin Investment Trust, trading at 19.99. The only way you can do it, and made an all-time high peak D in the weekly chart way back at 38.71, the week of December the 22nd. This is about a week or so before the Bitcoin itself made the high. Did I know? Oh, then it got split. Okay, so I can't remember now. I think it was, I don't remember what it was in the monthly chart. I'd have to redo it. I believe it's a D, but maybe it's an F. But what's really important about this is that because it trades overnight and it's so vicious, I mean, percentage-wise, look at this, it's 10% already down today, minus 1.98. This is really difficult. So I made a mistake in the sense that I was talking about it, and I promised myself that next really big pullback, we would start to look at it as a position, not as a trade, as a position. I wanted to get it down in the below 8,000, and then just forgot to put it on my list, because in the 14,000s, that's where I would have said, okay, now you can get it. If you're prepared to put up with $14, for it to go back and test $12. That's the only way you can do it. But as a longer term move, I think we've got at least a 50% retracement possible. Maybe not at least. I would say more than a third to a half of a move back to the upside before it makes some kind of an arch formation and does a retest and then knocks people for a loop again. So we've missed the best opportunity. However, it's at 19.99. I'll be looking at it, but subscribers, send me an email or anything. Just tell me when you see it getting close to the $14 and right there. No, $15.50 area, maybe even $16.20 to $15.50. Let's see if we want to do anything with it. But I've missed the best opportunity for risk reward. I'm sorry. I was looking at it. I discussed it. I just forgot to put it in my newsletter as a potential for those of you who would like to have some Bitcoin. I want it as a trade that goes at least to a D in the daily, and then we'll see if the weekly is even going to make a B or a C, and we'll go use our time frames that I always talk about that I like to do. So yes, I missed the opportunity. It's an error on my part in that it's something I did want to do, James. I apologize. That's a couple of years, I say. It did remind me, and coincidentally came out over the last 2 days. So this is the risk reward is just not there, because yes, it could go from the 90, let's call it 20 area into the 22s, but I don't want to be buying it at 19.99 to just see it pull back to the low 16s. That's just too big a percentage risk. I'd rather get it in the low 16, high 15s if possible, and see that there's an arch formation forming, so I know exactly where my stop is. If you're able to do that, even though it trades overnight and you have to wait for the next day, but I'd much rather have the risk reward in our favor. I couldn't do it here. So this is something I wanted to mention. A couple of things. Within the context of the different, look, if you go to Amazon is trading close to its all-time high, 1482.79 right now. 1498 was the round number high in the second. I'm saying I'm favorably inclined towards Amazon right now. The weekly chart looks very good. The monthly chart is still very good. This is good action, and I think that's what's helping the Qs. If you look at Apple, on the other hand, Apple has had a rebound. It hasn't gone to the old high of 180.10, the all-time high, in fact. But what it has done is it's come off from 180 to the 150 area, 30 points. That's 20, was it? Yeah, so that what we're looking at here is that you've got, yeah, well, about 18%. That's a big move down. And now it's rallying. And we'll see what happens. It's trading at 172.93 pre-market, up $1.08. All of this bodes well for the QQQs, and that's really what my point was going to be. So within the Qs, let's just look at Facebook. Facebook trading up 49 cents at 176.50 pre-market, made a peak B, a little arch formation. I think Facebook is the one that's going to struggle most. The weekly peak D at 195.32 on the 1st of Feb. Pulls back to 167, 30 points there. You've got that high of peak D in the weekly chart and a leg D. I don't think it's going to tank or anything like that, but I do think that it's going to have some kind of consolidation. They could see a test over a period of a few weeks, could even retest the 167s. So I'd be a little bit careful there. I'm not sure this is one of those. At this point, I think it just needs more of a rest period. I had a question when I look at GG. Yep, GG's gold core. It was very unusual. It made a recovery high at a peak C and then failed, and it was in the 15.55 area on the 16th of January. Comes down to 12. I mean, that's a big move down. Now it's trying to rally, and then it fails. It's at 13.12. I have to tell you, these gold stocks, the stocks themselves, majority of them are making me a little nervous at this particular point. I think they need more time. I'm not sure that gold core is going to plunge down into the 1120 area, but I do see it a little vulnerable here to testing the high 12s. If you look at Rand Gold, this is one of the very good ones. Rand Gold, is trading at, Royal Gold, I'm sorry, I always think, RGLD, trading at 83, up $1.21. This is one of the better ones, but it has a high-level consolidation, but on the shorter term and to intermediate term, I don't see this as very good action just yet. So you've got to be a little careful. If you look at the EUR-USD, this is the euro-dollar currency pair. A peak D top was made back on the peak C1, C2. Then it goes to the D, and it goes to the D on the 16th of February at 1.2555. And all of a sudden it's trading 1.23. It's under the 9-period moving average. Weekly chart has made a peak C, digestive phase going on. 1.223 is going to be key support. Monthly chart is still quite good. And the USD-JPY, which is the dollar-yen currency pair, having a nice balance, just a balance so far at 107.56. It needs to get to the 108.50s to the 109.20s to really say, hey, this could have legs. I'll be right back. Basil Chapman, Tiger Futures out. The futures are down 8. S&P is up 1.17. The futures, that is. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So what we're looking at here in the XLF is the Financial Select S&P Spider Fund, trading at 28.89. Good reaction. But the weekly chart is the same situation. The weekly charts really have to improve a great deal. So looking at different techniques, one of the things that I've been looking at is we wanted to find out, at least I wanted to find out how when looking, Dave White has done some fabulous work on looking at using certain techniques to understand, for instance, momentum on the upside or downside, using new highs, lists of new lows, etc. So one of the things we were looking at together is what happens when you get overbought situations and the major trend is one way. In this case, let's say it's overbought, but the major trend is up. Well, what happens is that even though it's overbought, every time there's a pullback, you should still continue. The tide is going to keep rising. And every time it pulls back, you want to see the tide continue to rise, prices rise. What happens when there's a change in trend and you get overbought readings, but the tide has changed? That is, the larger tide has changed. And my question is, for me, I want to see if the larger tide is changing here. For instance, you see this in the XLF, you see this huge move down in the green line. That's the 9-period differential in the MACD, the moving average convergence divergence. And the red line is the slower moving average 26-period. It has not yet crossed positive. And look at the energy it took to go from the high that was made at 30.33 to the low that was made at 26.76 on the 9th. And now we've gone back over about 50%. And what we're looking at is that the MACD finally is very close to turning, crossing positive. That's going to be a big thing. If it crosses positive, holds positive with a big theta, beta differential. I never remember which one it is. You want to see the green line sharply above the red line, and you want to see the slow stochastic at 60% pushing even higher. So that's the thing that I'm looking at, because what would happen then if there's a larger tide change? In other words, the weekly is saying, not the monthly, but the weekly is saying, you know what? I'm so overbought, I need time to pull back. And that time is going to take a lot of energy out of the technicals, and they're going to have to repair that damage. So just how do I define this? By saying, see, the unbalanced volume was at highs. That's good. But the stochastic hasn't even gone to the 80% level. It's at 60%. And to me, this is saying that I've got to look at this as if I'm looking at the tide, and the tide is suggesting this is a fabulous move off the bottom, but it isn't strong enough to heal the wound of the down move, and that the down move itself needs more time. And that time is represented here in the fast-moving average of the MACD. If I go to, say, let's go to the S&P, let's go to the SPY. Most people can pick up a chart of the SPY, put these technicals in. Look, the SPY has not yet crossed positive in the MACD. The histogram, these little vertical bars that are suggesting the difference between these two moving average lines is getting better and better. It's at minus 0.17. It hasn't crossed to a plus 0. It's called the 0% line. And the stochastic's only at 56%. And that's saying to me, yes, good price action, but the technicals haven't yet caught up. And because of that, that's one of the things that I'm looking at. So with the work that Dave did in the 9 DMAs, the question is, some of them went roaring they gave a fabulous bottom reading back the week of the 9th of February, around about that period. The rallies were very strong, but what we're looking at is, and then in the last couple of days, they ran above the gray middle line. They went to the overbought readings. And you've seen some kind of pullback in some of the indices, not all, over the last few days. So we need to see the cycle that's took us to the highs back around about the 23rd to the 29th of January. We want to see the cycle that's taken us to the lows, and we want to see if this cycle is going to take us to new recovery highs or whether it fails. So that's going to be the big issue as far as I'm concerned. However, as I said before, now we have mostly long positions. We only have one short position in the housing stock, which is acting terribly, and we're trying to add to the long side. So it's really positioning more than anything else for me. So the answer to the question is, Any more thoughts on the sector rotation? I'm following the sectors one by one because my eye is saying that the semiconductor, the SMH, is really a very big clue. SMH right here. SMH, we're out of all our positions, had really good trades on the downside, got short just off the top, and we took profits on the way down. And the final one yesterday, we took only a 2-point gain from the short position. The others were really big in terms of what the SMHs have given over the last 2 years. So within that context, what I'm looking at here is if the SMH is trading at 104.83, that's the market vector semiconductor ETF, is able to climb into the 106s, I'm going to have to say, you know what? Sector rotation says if the semis, which are helping both the QQQ, look, yes, the QQQ up 67 cents so far this morning, pre-market at 165.96. Made a peak A if it goes above 165.676. That starts a leg B, and so far this is very good action. Semiconductors are helping. XLK is another one. You remember the XLK is the this is the Spider Select Tech Fund, and that's also, it's got a trend line resistance, Chapman wave falling X formation, needs to break above this trend line. In fact, it needs to get it. It's a 67.24 right now. You want to see this up in the 68.50s, and I'll say, oh yeah, that's going to be a retest of the 69.19 all-time high. That'll be very positive, and say, in the selectivity of sectors, you've got some sectors that have rebounded tremendously and still very positive. And of course, the monthly chart is only in a leg C in the Spider Fund. Isn't that incredible? Now, a couple of things I want to look at here. Oil, OIH. OIH is at 24.22. This is the one I said, I just don't see anything happening too much at this particular point. Crude oil has pulled back sharply, but it's now rebounded. Not a bad rebound, but the market vectors oil service ETF are trading at 24.22. It really has to hold 23, and the resistance is at 25. Oh, I'd say 25.80 to 26.20 over the coming week and a half. So nothing yet to see there. Another thing I want to look at here. So that. Oh, wood. Remember we spoke about wood, which is the iShares Global Timber and Forestry ETF. Fabulous spike to the upside, making the V-shaped pattern. It looks almost like a semiconductor here. And that's a good sign. Also only a leg C in the monthly chart. So this, for me, overall is going to tell us quite a lot about international markets. And if you look at the HGX, look at that. This is the Philadelphia Housing Sector Index. This does not look good at all. And I think it's being impacted by the rates. And we'll look at the TNX right now, TNX.X. This is the 10-year trading down 11 cents to 28.82. Had made the peak T. This is like the TBT chart, the inverse of the TLT. Basil Chapman will be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi folks, we're back. So this is a pre-recorded show. It's live right now, but if you're listening to it at noon, it'll be at my usual time. It'll be pre-recorded. And don't forget to come into the den. I mean, we have some fabulous traders here, people with really good ideas. It's not really a chat room. It's really a talk stocks type room. It's really very beneficial, I believe, to one's trading ability. Learning, just checking things out, getting ideas. We're looking at IBB at 109.25. You see, this has gone to a peak B, gray peak B, because it's under the previous major high at peak F in the Chapman wave methodology, right there at 119.30 on the 29th of January. And what we're really looking at, and that was a pretty big pullback to the 101 area. Now what we're looking at is this going to be, see, I love to talk about 2 fighting patterns. You've got either the arch formation, or in this case, you've got a V formation. The V looks like this, and we'll see what's going to happen. If I did a left side, right side price time match, it just looks like it would be too difficult to get to the 114s. We've already used up that time. In other words, if I went, look, 1, 2, 3, 4, 5, 6, 7, 8, 9 to the plumb line, this midpoint line right here, to the right side, you would have had, today, you would need to see the IBB. I'd be able to talk about it if the IBB today hit 112.50. I'd say, aha, nice V-shaped pattern. But we've moved up to the right too much, so now I have to think possible arch formation. If there's a failure, you want to see the IBB hold the 108s. Closes under 108, that's a real problem. Peak E, a leg E in the monthly. This is a very unusual pattern. It made a peak here in July of 2015. We were very lucky. We got, the high was 100, it's been split, I think, 133. We got it just off the top, fortunate enough to make 111 points to the downside in the IBB on the short side. And then what happened at 80.09 in the February of 2016, it started to move. Then went peak A, B, C. All these are gray A, B, C. But then it goes D. So it becomes blue because it's a full buy mode. And it goes to an E. And all of a sudden it stalls. And that E is way below that E high of 119.30 in January is way under the high that was made, the all-time high of 133.60 that was made back in July. So that's very unusual to go all the way to an E in a monthly chart in this pattern. So I'm looking at this, I'm saying, yep, there's a favorability rating here of about 30%, unless it can get to the 113s, 112.50, 113 area very quickly. Then all of a sudden I'll say back in favor. At this point, I think it's just a bounce. That's IBB, the IBB Nasdaq Biotech ETF. If I'm looking at I just wanted to go through a couple of sectors here. The IYT, which is the transports, should be helped by the crude prices falling. It really isn't. 186.41. Here again, I'm looking more at an arch formation like that than the breakout to the upside. If I go to the upside, I always take it at a safer place right there. Let's go to this. Yeah, so what we're looking at is 185. The IYT transportation iShares ETF really needs to hold 184. Close under 184 says, uh-oh, failure mode, goes to an arch formation. So that's another one. IYR, I had a question about the REITs. This is the IYR. Same thing. Look, all of them have this pattern. Weekly charts look very poor. Monthly chart doesn't look good. Made a lower low, making lower lows and lower highs. Looks like an A to B equals C to D, the traditional lightning bolt pattern. So just be a little careful with your IYR. I said I would go to, I'm not going to be able to do the A, B, C, D. Yep, let me just get out of this. I wanted to show you something with the yields. A lot of people ask about my triple yield chart. Where are we? Well, where we are, going right there now, we're going to go to the 30-year, which is white, the TYX, the 10-year yield, which is the T-notes, 10-year T-note, which is brown, and the cyan is the 5-year FVX yield, and that is saying, very well, that is saying that it's still going towards the highs, a little bit of a pullback so far. Leg D weekly this week in the 5-year, peak D so far, if there's no new high this week in the 10-year, the brown one, and the same thing with the 30-year. I was saying a week and a half ago that I was anticipating over the next 2 weeks, maybe 3 weeks, while we might still make higher highs, there should be a slowing of the yield expansion to the upside. In other words, higher yields could slow down a little bit right here. They're still going higher, but I think the actual momentum has started to slow a little bit. That's really what I'm looking at here. And that has, as I said before, in the weekly chart, it's a weekly chart that you're looking at for the yields. The weekly chart of wood, this is the iShare, look at that. Really nice. If it fails from here, there's a whole technique that I talk about. We'll know very soon. And the HEX Philadelphia Housing Index is looking very poor. A couple of things that I want to look at here. Look, we're going to go to DEDOW. This is the DAX index. It's got the same pattern, A to B, very small little rebound off the big low. This is not positive for the daily. It's not positive for the weekly. And the monthly is suggesting there's going to be a peak F top. I have to tell you something. The more I'm trying to be as practical and realistic as I can, the huge move that we've had up since the Trump election, November of 2000 election result from that very day of the turn, night of the turn, we're looking at a very much needed digester phase. If you look at Great Britain, GB, DOW, this is the Dow Great Britain chart, United Kingdom chart, same sort of thing, made a peak A, it's sort of struggling, not great patterns at all. Here's the one that I want to look at, the Nikkei, NK. The Nikkei is a continuous contract. It has, in fact, made the D and the E in the daily, so it goes to a D, then it makes an E, down arrow, sell mode, plunges, A, B, C, trough D, has a bounce off trough D, right here in the daily, goes to an A, goes to a leg B, that is in right now, it's up 105 at 21,975. This is absolutely a peak E that I'm looking at right here. Let me just change that. There it is, E. Oops. So what we've got is peak E, the down arrow, because the technicals and everything's failing. So when I try to be as objective as possible, I'm saying to myself, that rebound is a rebound. Some sectors obviously are going to rebound and do much better. The Nikkei hasn't yet crossed positive in the MACD. If it does cross positive, it could go even further higher, but I'm not sure about going to a new high in this particular phase without some further digestive action, and that's really what I'm looking at. So in sum, we've got the VIX index right now is down 26 at 20.34. Discussed it yesterday and discussed it again today. It is holding very well, considering that it should really be in the 16 to 14 area now, not 20.34. In fact, you know what, the very last segment, I'm going to take a little time. We're going to talk about the VIX index and what the implications are at this particular point. Basil Chapman, Tiger Technicians Hour, and you've got the futures. Dow futures are unchanged. S&P futures is up about 3. We'll be right back.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. So we are back, and don't forget, if you're listening to the show right now, live, Larry Pesavento, one and only Larry Pesavento is coming up straight afterwards. And then if you're listening to the recording of this show at noon, which will be just going on to 1 o'clock, don't forget, Steve Rhodes comes up. Steve is back, and you've got Steve, you've got Dave White, you've got Tom O'Brien. So great listening, and don't forget the Tiger's Den. Let me just run this again. The volatility index, with all this turmoil that's gone on, with every single sharp decline being bought except for yesterday, where it was bought and then we failed and went to an even lower low, that's suggesting to me that this VIX is saying at 20.38 that fund managers are still buying insurance, that you got to be somewhat careful right now. And when you see, if you see the VIX start to fall into the 16s, 4 points down from here, the market will zoom to the upside. And that's kind of the way I'm looking at it right now. So that's the volatility index. Within the context of the market, so for subscribers, we're still We have almost all long positions. We're trying to buy a number of long positions on pullbacks. We're looking more at the infrastructure side as we have for weeks and weeks. I like that. We have one infrastructure stock that's done very nicely. We had a couple that did very well. We're trying to get back into them. There's a favorability rating for me within 2 sectors in particular. Well, actually, let's call it 3 sectors. And those sectors are kind of what we want to be looking at for subscribers to my opening call. And what's fun is that we got a choice of very low price stocks. I like to have low price. If they're going to do as well as the big ones, then why not get the low price ones? Because the percentage gain is so much better. But you do have some risk because I like to have a certain point move to the downside as a security blanket for stops. So they're really quite tight stops. But if it does work, it works out very well. So that's kind of what we're looking at in my opening call, my daily newsletter. A couple of things we're looking at right now is yields. Yields are actually staying in the higher range. And is that going to impact further the housing market? We'll be talking about that more tomorrow. Have a great day and stay tuned for great programming here. Basil Chapman signing off.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.